Hey guys, Ross Gibbons here. Today I want to give you a quick lesson on volume profile because it's the indicator I use more than anything else, and I get a ton of emails and questions and comments about what is it, how do I use it. So today I'm going to give you a brief lesson on how to use volume profile to identify better entry and exit targets for your trades. Now what you're looking at here is crude oil futures going from about April of 2016 to today. And on the right is the volume profile. And to use volume profile, you have to accept one basic principle, and that is the fact that markets are auctions. They're simply buyers and sellers giving prices they're willing to buy, prices they're willing to sell for, and trying to find an agreed upon price or an agreed upon value. And what the profile does is represent that in a histogram so you can see what prices they like and what prices they don't. So the further out to the left they are, these high volume areas means a lot of trading or a lot of volume took place. And the further to the right, these low volume nodes means not much trading took place. And the big picture is that stocks and indexes and commodities, they tend to gravitate from one high volume node to another, one accepted price range to another, and they tend to reject or blow through these low volume areas. So let's take a look at crude oil, for example, and there's really two phases any stock or commodity is going to be in. It's either in a rotationary phase or it's in a price discovery phase. So crude was rotationary from about the middle of 2016 toward the end of 2017, right here in this range. And this red line going across is something known as the point of control. It's the highest volume area on that chart, or the most accepted price. And when I say rotationary, notice it just kind of bounced back and forth around this accepted price range. So you may refer to this as being range bound or trading in a channel, but it's just bouncing back and forth. You know, sellers, they get too far and buyers step in, buyers get too aggressive and sellers step in, but it just chops around that accepted area. Well, here late 2017, it went into price discovery mode, where it goes outside of its range and it's going, the buyers are in control until sellers step in and reverse it. And then this is price discovery mode with sellers in control until buyers step in, and etc. So how do you use this information? Well, I like to use the high volume nodes as targets when you were in a trade. So for example, if you got short here crude oil back in September of last year and it was at 72, 75, whenever you identified the downtrend, you're looking for targets. My targets would be the high volume areas, and the highest volume is this big chunk here between about 55 and 45, with a focus here at about 49 and some change. You notice it went all the way from 76, fell right here to the point of control, tried to push higher, got rejected, came right back to the point of control. Sellers tried to push it lower, came right back to the point of control, and it kind of chopped around in this high volume area here before once again beginning to trend higher. Now I did a video back in February, and this is what that looked like when crude was trading at $54, and I set a target of 67 and some change for the upside. Now I want to show you why I did that and how close we got. So the profile you're looking at here is inclusive of all the data on the chart. So if I move the chart, for example, if I do this, the profile is going to change. So what I want to be fair with this, and let me turn this one off, and I'm going to draw one more that is a fixed range. So this is going to be just the data we had at the time. So it was right here in February to February 14th of 19, right here on Valentine's Day, right there. Now let me adjust this. I won't get into all the settings, but I just want to make it kind of easier for you guys to see. Okay, so this now it's on the left side, but you see that it's the same kind of profile. It's identifying what we had, where the volume was. Now at the time we were right here, okay, and I can zoom this in to see, but we were right there at like 54 and looking for an upside target. So we chose this high volume area right here, which is right about at 67 and some change as our target. Now the thing moved right as we expected, pushed higher, 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 got within about $1 of our target and then retraced a bit. Now I think it retraced because of more macroeconomic news. It's trade war and OPEC and Iran and some other things that kind of couldn't be avoided that pulled this thing down, but came pretty darn close to our target. And without that news, I'm almost positive we would have hit it. But that's really how I'm using this to identify targets. Now, if I then become bearish on this, let me turn the other one back on. If I switch and become bearish on crude oil, if I think it's going to pull down or begins pushing down, where are my next targets going to be? Well, the next high volume areas. First, I'll be looking for right here at about $57 a barrel. Then I'll be looking for it to get really, there's a big chunk of meat right here between about 54 and 45, but the big target would be right here about 49 and a quarter, right there to that point of control where I'm looking for it to pull back to. So this is how I use this indicator, is identifying targets. I'll also use it if I want to build a position. Let me show you an example. This is Amazon. Let me zoom way in on this. You can see what we're dealing with. And Amazon's a high price stock, so I got to change our settings on this. Whoops. Just to bring the row size up because it's too much data for it. So recently we saw, the market pulled back the last couple of weeks. It's been great the last 2 days, but we got down here. Notice, see how Amazon got right here to this high volume area at around 1820. I bought some Amazon right there because I knew it was a magnet for the stock in an area that buyers would get interested. I've also had standing orders out to buy more that I put in here at $16.95 and another one here at about $15.75, the next two high volume areas. Now, it may not get there, may not see it. We didn't know how far the market was going to pull back, but if it does, those are the likely targets to get in. And instead of trying to catch a falling knife, I'm looking for places that I think buyers will step in and where I want to grab some shares. If you were short Amazon, for example, same thing. Those would be your targets. You'd be looking for it to come down here, $16.95ish, then $15.75, and then if it keeps going, $14.50ish. But all these higher volume areas, because that's really the hypothesis on how this works. If it's crashing down, it means sellers are in control, and they're going to stay in control and keep selling until buyers step in and get interested. And all we have is history, and this shows us the other prices, the other areas that buyers stepped in and were very interested. On the upside, same thing. We were pulling up from 1,300 where we got in December. Where are likely targets? Well, we're looking for here at around 1,560. We're looking for this next one at 1,700. And where did it go? Went right here to the 1,700, pulled right back down into the other point of control, pushed up back to that one, back down to that one, pushed back higher into the next volume area, stalled a little bit, pushed into this next big chunk of volume, and it pulled back into this next one. So that's kind of what you see. You're going to see these stocks, especially stuff with high volume, move back and forth between these higher volume areas or between these accepted ranges. And these low volume areas is either going to reject or blow right through. So, for example, if we look here in March, so notice we just kind of blew right through this 1740 area, this low volume. But when it pulled back, that's where it rejected and pushed higher. So these are going to be of much less significance, and the higher volume areas are going to be where the stock gravitates to. Now, don't be surprised if it chops around. Again, we talked about rotationary versus price discovery. You could argue that Amazon was very much rotationary here from the start of the year till about March, as it just chopped around this big chunk of volume between about 1,700 and 1,600, and then went into price discovery mode. So if it gets to your target and then kind of chops back and forth, don't be surprised. It just means the market is in acceptance and is waiting for another price discovery mode, either push higher and you'll use those targets, or push lower and you'll use those targets. The only time it's not super beneficial is when you're making new highs. So if Amazon gets up here above 2,000, it's never been there. So we don't have any data. We don't have any volume to judge by. So you're going to have to rely on something else. It is only going to be beneficial for price ranges where the stock is traded before. But if it continues to chop around this area, around this 1900, it's going to form more and more volume here. If the thing pushes higher, makes new highs, and then reverses, where do you think it's going back to? It's going right back to the last area it found acceptance, which is right here about the 1900, 1910. So that's the broad strokes and volume profile. I won't get into weighted average prices and individual profiles and how to day trade this stuff or value areas. I mean, there's much more to it, but that's the broad strokes. If you take nothing else from this, if you're bullish or bearish or looking to get into a stock at a lower price, use those high volume nodes or the high volume areas as likely places that stock is going to gravitate to next, and it will help you get a better idea of where to place your entries and exits.